How to claim medical expense tax credits for disability. Are you wondering how to claim medical expense tax credits related to disability? This process can seem overwhelming, but I am here to break it down for you in simple steps. First, it is essential to know that these credits allow you to lower your taxable income based on qualified medical expenses that you or your dependents incur. These expenses should not be reimbursed by insurance or other sources. Start by collecting all your receipts and documentation for the medical expenses you want to claim. Qualified expenses often include costs for doctor visits, hospital care, prescription medications, adaptive equipment, therapy, and certain home modifications that accommodate a disability. Make sure these expenses are reasonable and necessary for the treatment of the disability. Next, you need to determine if you will itemize your deductions on your tax return. Medical expense deductions usually requiring itemizing, which means using Schedule A on Internal Revenue Service Form 1040 in the United States. You can only deduct the portion of your total medical expenses that exceeds a specific percentage of your adjusted gross income. For most taxpayers, this percentage is 7.5%. For example, if your adjusted gross income is $50,000, you can only deduct medical expenses that exceed $3,750. If you are claiming expenses for a dependent with a disability, ensure that the dependent qualifies under Internal Revenue Service rules. This includes being your child, stepchild, or other qualifying relative. You can include medical expenses you paid for them. In some cases, specific tax credits or deductions exist for disability-related expenses or for taxpayers who are disabled themselves. These may include credits for impairment-related work expenses or deductions for specialized equipment or services needed due to disability. To claim the credit or deduction, follow these steps. 1. Collect all medical expense records for the tax year, including receipts, bills, and insurance statements. 2. Calculate your total qualified medical expenses. 3. Subtract any reimbursements from insurance or other sources. 4. Determine the deductible amount by subtracting 7.5% of your adjusted gross income from your total qualified expenses. 5. Complete the appropriate tax forms, such as Schedule A for itemized deductions. 6. If applicable, complete additional forms related to disability, tax credits, or impairment-related expenses. 7. Submit these forms with your tax return. For disabled parents or those parenting with disabilities, it is helpful to track all adaptive living expenses carefully. Many costs related to making the home accessible or purchasing disability-related equipment may qualify. Additionally, medical expenses for children with disabilities can be included if they meet dependency criteria. Some states or local jurisdictions may offer additional medical expense deductions or credits for disability-related costs, so be sure to check your local tax rules. Finally, consider consulting a tax professional who is experienced in disability-related tax issues. This can help you maximize your eligible deductions and credits while ensuring compliance with all Internal Revenue Service requirements. This approach can significantly reduce financial burdens associated with medical and adaptive care expenses, contributing to more inclusive family lives.